to get this other one up, so get ready to read the comment.
Get ready to read.
Get ready to read. You better count your chickens. If you have chickens, count the chickens. Oh, we got it. That was easier next time.
Okay. We'll have this ready to go just in case.
Count the chickens. We got lots to talk about today, man.
All right, everybody, don't forget to load up the chat box with questions about buying houses, financing houses, what programs, what do you need, am I ready? All the thoughts that you may have about buying a house. If you want to know if you're in the right position or if you're close to it, make sure you load up that chat box with all your questions, comments, concerns, thoughts, all the stuff that's bouncing around in your brain, and we will address all of them. Thank you, Garcia, Dahlia, Erica, Erbuddy, Ava, all y'all that are getting right here and have a seat. We're going to give you some educations here about buying houses. Carlos.
We're going to talk about a lot of stuff today. I've been watching some other loan officers to see if we can get better. I'm always trying to get better at what we do, better to give you guys information. Always be truthful. And I see the other loan officers on this platform. It's a little painful to watch them because they're not really entertainers, and they're trying to put out guidelines, and they're putting guidelines out like a
robot?
like a techie does. I don't know. So I'm trying to figure these things out, and I really want to know from you guys, what do you want to know in order to get that house? So one of the things I heard a lot about, and I actually did some research, is the foreclosures. Oh, what? Foreclosures are up. And I'm like, yeah, that's kind of true, but it's kind of not. And like, well, how do I tell everybody that this is true and not? And how does it affect you in moving forward and getting your house in 2024? So I pulled the charts, and this is going to show you from 2003 to 2024, the foreclosures. So you can actually put it into perspective. The foreclosures, now here's what they are. 03 is all the way at this side, and 24 is here. So what I want you to look at is the height of, this is when the crash happened. This is foreclosures in the crash. So when people are saying, hey, foreclosures are up 200%, 300%, they're not entirely wrong, because from here to here is up 200 to 300%. However, this is foreclosures at the peak of the crash. This is foreclosures prior to the crash. We're not even close to that. So when people say, hey, the foreclosures are going to destroy the market, and I tell people, nah, it's not real. Those aren't the numbers. It's really hard to articulate. And that's why I pulled up the data, and credit to Real Clear Tax. Real Clear Tax is the guy I follow. He's actually on our interesting feeds. There's a few accounts that are interesting feeds. And he does a lot of research. He's a CPA. He does a lot of stuff. He's not in the financial business other than being a CPA. So he's got no dog in the hunt. He doesn't want the rates to go up or to go down. He doesn't. So like for us, we want them to go down. We'd really like to lean it so that it's going to go down. But we can't change the facts. The facts are prime or Fed funds rate right now is 5.25 and 5.5. So we are bringing up the data so that you can understand this. It's pretty insane. I don't think you've seen this here, right?
It's pretty cool.
Yeah. So we got a lot of questions. Let's go for the questions. We are here to help you get a house in 2024. Navigate the markets. Figure out what the right interest rate is. We got a lot of people thinking, hey, if I go to a different bank, I can get a dramatically different interest rate. It's not the way it works. It really isn't the way it works. We all get our money from the same spot. We get it from Fannie Mae, Freddie Mac, VA, FHA, USDA, a few others. But we get our money from there, and that is set by a market. And then the banks have their little bit of profit models, and some of them give a little bit better rates, some of them a little not so good, but they're all in a range. It's not going to be like dramatically, hey, I went to one bank and got 7.5% quote, and I went to another bank and got 5.5. That doesn't exist. If that's happening, there's something hidden inside of there that they're not telling you about, and we will tell you about it. I know the numbers. I know how they get there. I will teach you how they get there so you can make an informed decision. Next, go.
John L. Oh, guys, load up the chat box. Ask all the questions about home buying programs, all the things you want to know about buying a house. John L., what is the longest y'all work with a client to get into a home?
Probably 4 years.
Years.
Yeah, probably 4 years is the longest.
Years.
I got somebody who was like a veteran, qualified, and in the middle of escrow, and something happened in their life and they couldn't. And then they said, oh, I'm never going to be able to buy a house. And I said, yes, you are. Let's fix this thing that went on with your life. And it took them about 4 years. And then we closed escrow about a year and a half ago.
Yeah. So what happens is, if you're not qualified, we don't just ditch you. We will give you the guidance. You'll check in with us from time to time. Let us know how your credit is, your savings. And sometimes we run the numbers once every 6 months, once a year, until you get into a home. So we'll hang in there, John. We will hang in there as long as you hang in there. Snowboarder, Hawaii. When is the market crashing?
I don't think it's going to crash. And what do you mean by market? Are you talking about stock market or are you talking about real estate market? Because
Supermarket.
or your supermarket be crashing, but that would be a car crashing into the supermarket? No,
Maybe.
yeah. So anyway, if you're thinking that the real estate market is going to crash, I have very bad news for you. And the very bad news only comes in facts. The fact that people have been thinking this is going to happen for the last 10 years is real. The fact that the numbers came out yesterday and showed a 6% across the board year over year appreciation in real estate, that's now a fact. I know there's a lot of people who think it's going to happen because the foreclosures are up, and that's one of the things we like to talk about is the facts. Here are the foreclosure numbers. These are the foreclosure numbers. This is 03 and this is 2024. This is foreclosures in 03. They were kind of high. Then the big crash happened. And most foreclosures happened in here. And then it went all the way down. Now, this was a moratorium on foreclosures because of the stop. So there was a moratorium. They could not foreclose. It was against the law. But once foreclosures started, they started up again. And if somebody says, hey, foreclosures are up 200%, 300%, they're not lying. They're telling you the truth. They're telling you that from this line here to this line here, they are up 200 to 300%, but that is nowhere near this situation. Yep. So, I don't think it's going to happen.
Jesus. Well, Matt Rich, thank you for the love.
Appreciate you, Matt.
Jesus, first-time buyer, 90K income, 20K saved, 830 credit score, no debt. What can I afford? Good income, has assets, great credit, fantastic credit, Jesus. I don't know what you did to get that, but keep doing it. Teach others, because this is a very rare credit score.
You're cracking 400, 420, somewhere in that range to start. It is going to depend on your property tax base and your back-end revolving debt. So those two things are going to be very important. A few cities where your insurance is going to play in, like Miami right now. It's really rough to get insurance in Miami. It's really rough to get insurance in Southern California. San Diego, Los Angeles, Riverside, San Bernardino, Orange County. It's extremely rough to get insurance there because there's this hiccup in the market.
And Jesus, you have 2 years worth of work history. Have you been working for the last 2 years or 2 years combined? You ready to buy a house? Go to the link in the bio, click on apply for a home loan now, and start the process. And Brianna, what should I do? I have $5,000 and no credit. Should I keep saving?
Brianna, we got to find out if your no credit really is no credit, and we did not address your work situation. All loans are based off of income, debt to income ratio. So we need to know what your income is. $5,000 might actually be enough to get you start moving forward. But no credit, do you have no credit, or is that no credit that you want to talk about? The only way we would know, Brianna, is to pull your credit. If we pull your credit and it says NA, which means you have no credit, then I have a possibility of doing something called alternative credit. Alternative credit is when I say, hey, Brianna, wherever you live, you pay rent, right? Even if it's with mom, you pay rent, right? $500 a month. All right, cool. Show me that you've done that for the last 12 months. Do you pay electricity where you're at? Do you pay anything that I can prove
cell phone,
for the last 12 months?
Electricity.
Yeah, cell phone. Everybody has a cell phone.
But if you're ready to buy, $5,000, that's not a whole lot of money to get you into a house. We potentially might be able to get you into a down payment assistance, and here's how. Go to mom, go to dad, and make sure they have good credit, okay, whatever that means to them. See if they have a credit card that has a zero balance or low balance with a high limit, $1,000. They don't owe any money on the credit card. Have them add you to the credit card. As long as they've had good history for, let's say, 3 years or more, you're probably going to jump straight into like a 700 FICO score, like no doubt, right out the gate. That $5,000, if we can get you into a down payment assistance program, is going to be used for a deposit that you could potentially get back. And if we can get the agent to cover or negotiate closing costs, we could probably put you in a house like now. But you have to be willing to put in a little bit of that work. Snowboarder Hawaii said foreclosure.
Okay, foreclosure, Snowboarder Hawaii. You're about to teach everybody on this feed something. I pulled the delinquent of 90 days all the way up to 2024. This is from 03 to 2024, and it's going to be hard to read. If you want these, text us, and we'll give you the actual graphs. But it's going to be a little hard to read, but I'm going to set it for you, okay? So right now, if you will look, there's two I want you to look at, the blue one and the yellow one. The blue one is credit card debt. Credit card debt, and this starts in 03, went through the crash, it went up, and then came down, and right now credit card debt is going up almost as high as the crash. Credit card debt is ridiculously high. But look at the yellow one, and the yellow one is mortgage. This is 90-day lates on mortgages. If you'll see, it's down, down, down. Then through the crash, 90-day lates on mortgages. And then if you look at 04, it's at a record low right here, which means people on a mortgage are not 90 days late, by and large. Now, if you look at your social media apps, that's not how you sell things. You don't sell things by saying, everything's okay. Yeah, things are looking okay. You don't sell that. You sell it by saying, hey, foreclosures are up 300%. And they're not lying. It's true. That is a true fact. But if you take the whole perception out of it, the whole perspective, and you realize that that percentage of 300% is junk. They're lying to you. They're lying to you and telling you the truth in the exact same sentence. Because if you put it in totality, it's not high. It's not high. And if you look at the 90-day lates on your mortgages, 90-day lates on mortgages are at an all-time low. 90-day lates. Here's why. Because most people in a mortgage have a lot of equity and they don't want to lose that house. They don't want. And there's programs out there right now that help people in the rough times. There's forbearance is not very difficult to get. You just have to prove that you have a reason. Forbearance means, hey, mortgage company, I'm not going to make my payment for 6 months. Can you work with me? All right, can you tell us why? Yeah, I lost my job and I'm going to get a better job, but I plan on paying you. Mortgage company says, I can live with that for 6 months. And then you come back in and you start making the payments. Are we good? And they say, you're good? Okay, cool. So forbearances, they're up. Forbearances are up, no question about it. But delinquencies are not. In order for them to foreclose, they need a 90-day delinquency, and this is what this number tracks. So I'm so glad you asked about that, Hawaii, because we helped out a lot of people.
Jesus, thank you for sharing the live. More of you, can you please share the live?
Appreciate you.
Dempsey Daddy followed the host. Thank you. Jesus said thank you. Dempsey Daddy said 730 credit score. I don't know why that's relevant. Dempsey Daddy. Oh, here we go. Here's why. $62,000 a year. No debt. New Jersey. No money down. First time home buyer with a 730 credit score.
So it's going to depend. I would say if you went no money down, 230, 240 maybe. But if you put the 3.5% down, I think you're cracking 260, 280, somewhere in that range. But property tax base and insurance and your back-end DTI are going to affect that. So if you really are, you're serious about getting this thing going, we won't charge you anything. We'll pull your credit. We'll build your profile. We'll tell you what you're lacking. And then it's up to you. I talk to a lot of people and I say, hey, your FICO's 518. We need to get it up. Here's what we need to do. Here's the credit repair agencies I do. Here's this, here's that, here's that. And then I don't follow them. I'm not their father. I'm not going to follow them behind them and go, hey, did you do it? Did you do it? If you do it, great. You want a house. If you don't do it, I don't care. You move on. I got plenty of people coming at me who actually want to buy a house, and I put my attention to those.
We do loans in all 50 states, guys. So whether you're on the West Coast, East Coast, down south, doesn't matter where you're at. We do loans in all 50 states, Hawaii, Alaska included. That counts in the 50.
Yep.
John L., I just got divorced in July 2022. Not a first-time buyer. How much does that hurt?
Probably not a lot. Probably not at all. I mean, not at all. So the first-time home buyer programs, there's only 2 real programs out there, Home Ready, Home Possible, Fannie Mae, Freddie Mac. They're not even that great unless you have a very good FICO score. If you have like a 750 or a 780 or an 800, these are great programs. These are great programs. But if you have a 622 FICO and you're trying for a home ready or home possible, the MI is going to kill you. This is things that, unless you're in the business, you don't know.
What's MI?
Actually, even if you're a loan officer, you don't know this till you've done enough of them. MI is mortgage insurance. Because they're Freddie Mac and Fannie Mae, we actually have to shop the mortgage insurance. So it's a market. And if you have a lower FICO score like 622, it's ridiculously expensive. I see them as high as 3.1%. That's ridiculous. So if you have an 800 FICO, I can get in at 0.19 sometimes. And that's very low. So for reference, if I went with an FHA, it's 0.55. Doesn't matter which FICO score is. 0.55. They set it, so FHA is better. So if you had a 622 FICO and you said, hey, I want to do 3% down, I'll make a very strong case that FHA is way better. 3% down. I want way better than a 3% down conventional. Way better. Not a little better, way better.
Guys, going with traditional financing under conforming limits, that means your traditional home values, like regular loans, not jumbo. Anytime you put less than 20% down, you're going to have mortgage insurance, and that's what he calls MI. So anytime you put less than 20% down in that scenario, you're going to have mortgage insurance. Jesus, I stay in California. Yes, I do. So you help people with the credit. That's good, man. Good job.
All right.
Geo 5.7. How can I calculate the minimum payment on one of my credit cards? That's a whole lot of math, man. Whole lot of math.
Yeah.
We don't know the interest rate.
Why calculate? Just call them.
Or just look at your statement.
Yeah,
in your app.
Yeah, you just call them up and say, hey, MasterCard, I borrowed $1,000. What's the minimum I can pay you this month? They say $25. All right, cool. I didn't tell you $25. I said that was a scenario.
Wiggle proof. $220,000 income. We
Stop.
got ballers
Stop.
in here. Straight ballers.
220.
770 credit score. California first-time home buyer looking for a $900,000 or less. Duplex. Any tips?
Well, if you're looking, first off, you have to get pre-qualified. Here's the biggest tip, and you just found the right spot, Wiggle Proof, the right spot, because New American Funding has a proprietary product. The proprietary product is called NavCash. NavCash, we actually send you through underwriting. So let's just say we land at $900,000, and we send you through underwriting, and then you get a stamp from an underwriter, approved. Now you have the power to walk in with the bank's cash. The bank will literally put the cash out for you because you're already approved. So you find that duplex, and instead of you going, hey, I got a good financing situation, you go, no, I got cash. They're going to say, can you send me proof of funds? I promise you, New American Funding has the proof of funds. For whatever you want, they have it. So they'll say, can you send me proof of funds? And you'll send them, here's proof of funds for over $900,000. No question about it. You'll be able to do it. Now you are offering cash. You're no longer offering financing because that's what everybody's worried about on duplexes and properties that high. You're offering cash. Even if you come in at full value, you're offering cash. And if you try to do it in LA, I got news for you. That 2-unit pushes you way above 1 million. Way above 1 million for your limit. You can go higher than that. But I think you're very smart to stay conservative with the 2-unit. We can use that second unit income to help you qualify for the loan. And as long as you're living in the primary. If you're not, then it's a investment property, which is a different scenario. But NavCash is a very powerful situation if you're in a competitive market. So you found the right spot.
Yeah, Wiggle Proof. Great income, great credit. Do you have assets? You need some assets, man. You got to come up with some cash. Fabby32, thank you for the love. Screwed Up Sean, y'all two are probably on Ashley Madison, huh?
Which Ashley Madison? That's a
that's
dating
the
app, right?
The cheating app.
Is that a cheating app?
For cheaters.
Is
I
it?
think so.
Actually,
If you're
it's a
married
dating
and you
app?
want to date
It's a
somebody
dating
else.
app?
Yeah.
I don't know.
Estrella, good afternoon.
Wait, back up. Do you really think I qualify to be on Ashley Madison? Be like, hey.
Screwed Up Sean said so.
Screwed Up Sean says, hey, y'all two are probably on Ashley Madison. Yeah.
BXXT told Dempsey Daddy not getting a house with no money down. That's a pipe dream.
BXXT.
Incorrect.
You're not right. You're not right. You're not right. It is difficult. I'm not going to say it's not. It is difficult. But it is doable.
Yep.
And we do them. We used to do them a lot more about 3 years ago. But now we still do them. And you can get in for zero down. But you do have to fit in this criteria. You can't be like, hey, I make $220,000 a year. and I want to get in for zero down. Well, the system understands they have something called an AMI, which is area median income. If you make $220,000, the highest AMI I've ever seen is 188, and that you blow right past that at 220, so you can't get a zero down program. Zero down programs are for people that need zero down programs. So, if you make a lot of money, forget the zero down program. You don't need it anyway.
Giovanni Orozco, hello, I'm in Ohio. I'm trying to buy a house. I got some money for the down payment. I got an I-10. What offer?
You just changed the whole sentence by saying,
I got an I-10.
I got an I-10. So I-10 is a special loan. I-10, as you know, I'm not telling you anything. You're not a U.S. citizen. And because you're not a U.S. citizen, the loan system deals with you differently. You have an I-10 number. So there's something called an I-10 loan. And here's where I lose most people. I-10 loans are 20% down. 20%. No, you can't get 3.5. No, you can't zero down. No, you can't get 3%. You cannot get any of those. No, you cannot go on with your spouse who has a regular loan and you're I-10. Because if you're I-10, the whole loan is I-10. 20% down. However, if you do have that 20% down and I did not lose you, let's get you a house.
All right, Giovanni, get moving. User 3020. What is the max DTI for FHA?
Are you a loan officer, 3020?
I think so.
If you're a loan officer, then I'm going to give you, if you went to loan officer school, they tell you, hey, the most you can push it to is 45, 55?
Like 30, 40.
Yeah, something ridiculous.
Stupid.
But I'm going to tell you, in practical purpose for guidelines, you can hit 46.9999, right? 46.99?
Yep.
And
Front end.
46.9999999 and 56.99999. But you better have a damn good FICO score if you're going to push it that far. You better have a good, it's called comping factors. You better have some really good comping factors. A comping factor can be high FICO score. Very high FICO score, very good comping factor. Big down payment, very good comping factor. You're buying way below value because you just happen to got a deal and you're buying a $400,000 house that's worth $500. That's a brilliant comping factor. We can make 56.99999 work on the back end all day, every day.
Yeah, Andrea Benson, thank you for the love. Level Infinity, thank you for the love. Snowboarder Hawaii's back. What's the lowest cost of a home for foreclosure market, so-called? What website can I pick up a home? SoCal.
What's the lowest cost for a foreclosure market SoCal home? So foreclosure markets, that sounds cute and it's nice buzzwords, but foreclosure is very simple. Hey, this house is worth $500,000. The owner didn't make the payment. The bank foreclosed on it and now the bank is the owner. And guess what? It's still worth $500,000. The bank's not in the business to lose money. They don't give a shit. It's just numbers to them. So guess what they're going to put it on the market for? $500,000. If you bought it off the market for $500,000 and it's a foreclosure, you didn't get a deal. There's no real deal in that. The only advantage is that you don't have an emotional person negotiating on one side of it. It's just numbers for the bank. But if the market will bear $500,000, then they're selling it for $500,000. You're not going to get a special deal. It doesn't exist under that format.
So what you're talking about, Snowboarder Hawaii, is the market went up in 2020 or 2006. Mm-hmm. It crashed in 2008, and then all these foreclosures hit the market. They couldn't sell fast enough, so now we have all this inventory. So the values went from here to here because that's what the market could bear, and that's where people got houses for cheaper than they were originally sold.
Yeah.
In this market, that doesn't exist.
It doesn't exist.
There's too much inventory.
And this is, I'll touch it again. This is the foreclosures, everybody. This is the foreclosures. This is foreclosures in 03. This is 8, 9, 10, 11, 12. And this is 24. People say, hey, foreclosures are up 200%. They're telling you the truth because from here to here is about 200%. But it's not even close to the all-time crash. And it's not even too close to what it was before the crash. So
there you go.
Those are real facts.
Heather, I wish the credit score didn't have to be a huge impact on house purchase. Made mistakes when I was younger.
Heather, we all did. Heather, I got stories for you, man.
You're looking at two of them.
I got stories for you. The good news is, Heather, if you play the game correctly going forward, You can fix them. I was a guy with a 549 FICO many years ago. I am the guy in the 800s now. Because I realize this credit is very important in my life. I run businesses, I buy things. I need this thing to be high. It is a tool for me. And it should be a tool for you too, Heather. If you made mistakes, just say, hey, you know what? I made those. I can't change that. Now, let's move forward with what I can change. I hire credit repair. Credit repair will help you. Yeah, there's a lot of things you can do to get that score up.
Level Infinity. Do you work in Florida? Yes, we work out of Florida. We do all 50 states, including Florida. So call us. If you guys are ready to get a home loan, click on the link in the bio and click on apply for a home loan now.
We love Florida. I lived in Coral Gables. Coral Gables is this magical place, man. Coral Gables is badass. And I lived in South Beach, Miami. I love Florida.
You don't even have to tell me how pretty it is. Just look at how they govern it.
I know, right?
Freaking amazing. Heather, have money to pay everything just scores the biggest downfall. So you help rebuild credit or have good ones to use that actually help?
Heather, there's two ways to do it. we can turn you on to somebody who will help you, and they're kind of pricey. Pricey's relative. But there's also one actually on our bio. If you go to our bio, and they'll see Fix Your Credit Now, and it's an online service. It's cheaper than the people we would send you to, but it teaches you how to do it, and they walk you through it. We follow up with these people. We check on them to make sure they're helping our clients. And I have one real simple criteria for all the credit repair companies. If my client is happy with you, I don't care how much you charge. I don't care. Make your money. Just do good for my client. Do good. If my client comes back and says, hey, I think these guys are great, I'll keep sending you business. We send a lot of business to credit repair.
Heather, what's your score, though? I mean, a lot of people have credit that they're not happy with and that they think is not the best, but many times you can still buy a house. So what is your current score? Level Infinity. What do you guys think will be happening with the Florida housing market in the next 10 years?
So Level Infinity, it's a little different in Florida right now. It's a little different. The reason it's a little different is because the average days on the market for a house in Florida is 53 days. That's higher than across the country. I think higher than ever as an average day. So 53 days on the market, average for a house, means that they've kind of hit a peak and they're kind of leveling at the peak, but they're not going down dramatically because the market doesn't dictate that they're going down dramatically. So what do I predict? I predict that this guy, Jerome Powell, I lost his picture. I predict that this guy, Jerome Powell, will reduce the interest rates. I predict that the market will spark back up in third quarter, maybe fourth quarter. And I predict the Florida market will balance itself, get down to days on the market of 30 days, and then start its appreciation because Florida's a wonderful place to live. DeSantis is doing a good job there.
And if you listen to AOC, Florida's going to be underwater in a couple of years because of global warming.
I think she thinks it's already underwater.
She probably does.
Yeah.
Lil Mama. I have a credit score of 785, $45,000 to put down, but my kid's father has bad credit. First-time home buyer. I just recently started my own business about 7 months ago. Credit score 785.
Little mama. Oh, that hurts because you started out
very bad.
You started out like a rabbit out of the box, man.
They ran out of gas.
You're like, boom, 785 FICO. You're like, yeah, I got this thing. I'm like, cool, $45,000 down. Damn, you're kicking ass.
How tall are you, little mama?
But my kid's father has bad credit, and then just shot a leg out. Oh, that rabbit's foot was not lucky.
We got one more still.
For that rabbit. Okay.
And then 7 months self-employed.
Yeah. So if you're self-employed, I need 2 years of filed tax returns before I can use your self-employed income. Why? Because we don't know what you're going to write off. We don't know. You don't know what you're going to write off. You don't know. And the banking system says, you're too big of a risk. We're not going to do it. Not going to do it. Not going to do it.
Not going to do it.
So it has to be, if you're going to use self-employed income, I need 2 years. If you're only 7 months in, can't do it. Can't do it. Wish I could. Can't do it. Just can't. Now, if there's W-2 anywhere in there, then maybe. I've got a nurse who does W-2, but also has a business. I say, cool. 7 months in the business, have you filed your taxes yet? No. All right, cool. Give me the 2 that you have filed. Let me check your W-2s. Let's get you a house. Because at the end of this year, you're going to file those taxes, and you're going to show that you didn't make as much money as you thought you would in that business, and you probably wouldn't qualify next year, but you do qualify right now. Let's do it.
Yeah. But here's a question. So you have your business for the last 7 months. Were you self-employed at all before that? Because if you're self-employed before that, you're still self-employed. We may be able to work. But what we hear is you had a job, quit that job, started a business. So clarify that. Mia Love, what about I-10 buyers with SSN cosigned spouse?
Nope.
That'll work.
Nope. Still an I-10 loan,
Still an
20%
I-10.
down. Yeah, you
Still
can't.
an
You
I-10.
can use an SSN cosigned spouse, but you're either an I-10 loan, which you're using the income from the I-10, or you're not. It's not a co-borrower. It's not a cosigner. It's a category. So the minute you went to I-10, you jumped out of FHA, Fannie Mae, Freddie Mac, all your first-time homebuyer programs. They're gone. They're gone. Remember that the U.S. banking system is designed to help United States citizens. That's what it's designed to help. Now, that doesn't mean the banking system won't allow somebody from another country to come in, but they're not going to do it with the favors that the system allows a U.S. citizen. Like, for instance, I have something called a Foreign Nationals Program. You don't even have to have an I-10. You don't even have to live in the United States. I can finance you. You do need 20% down. You do need 20% down on all the programs. 20% down.
BXXT, this is kind of long. Make $94,000 a year and didn't qualify for anything. Had to have almost $20,000 cash to close for an FHA loan. Tried to roll closing costs into the loan and was told wasn't possible. And making $94,000 a year, I do not have $20K cash on hand, so I don't know why zero down programs cap out so low.
Okay, so that's a lot to unpack. That's a lot to unpack. But BXXT, I'm going to unpack it for you, okay? So you had almost $20K cash to close on an FHA. So the cash to close is a specific term. Cash to close means how much is my down payment? So let's just say $300,000 house. My down payment is 10 grand. My closing costs, for easy math, I'm going to say is 10 grand. So that is not down payment. That's cash to close. Cash to close, I take the down payment, which is 10 grand, plus your closing costs, which is 10 grand. So that's 20 grand. So your cash to close at that point is 20 grand. Now, if you had a good realtor and the market allows for it, your realtor could say, hey, listen, Mr. Seller, I want you to cover the closing costs because my client has 20 grand and he wants to put 10,000 for the down payment, but he doesn't want to cover closing costs. Now, the seller obviously doesn't want to cover closing costs. Nobody wants to pay bills. Nobody wants to. But if the market dictates, they'll have to. But you need a good realtor for that. And you tried to roll closing costs into the loan, but it wasn't possible. That's called stacking. If you get a house that's worth, call it $300,000, and you say, hey, I got $10,000 for the down payment. I can't afford the closing costs. All right, so you know what? Can we just increase the purchase price to $310,000? But the appraisal came in at $300,000. The bank's not going to lend you any more than the $300,000 that it's appraised at. So you can't stack in the scenario that I'm building right now because you're capped out by value. Now, if you have a good realtor, the realtor already knows the market value. The realtor knows the condition of the market and how many days that house has been on the market and knows whether or not they can get the closing costs. But I'm about to hurt your realtor really bad because you know who can pay for those closing costs? Your realtor. Your realtor can step in and go, hey, listen, I'll cover 10 grand. I'll cover it. I'm making 15 on this deal anyway. I'll cover 10 grand in closing costs. They can, not illegal. Has to be documented correctly. You know who else can cover that? Your loan officer. Your loan officer can step in and say, hey, listen, the guidelines only let me cover 7 grand because it hits a certain amount. But I will move the interest rate just a touch and I'll cover 7 grand. That's another way to deal with closing costs. There are many ways to deal with closing costs. So, making 94, I don't have 20K cash on hand, so I don't know why zero down programs cap out so low. Now, the zero down program is a whole different category because if I qualified you for $300,000 with your own 3.5% down and you said, hey, I want to go with the down payment assistance program, I would probably come in at about $240,000 qualification on the down payment assistance program. But Lee, you told me $300,000. You're correct, I did. I told you 300,000 if you brought in your own money. But if you're using the program's money, they don't let you redline it. They don't let you max it. That makes sense, right? Everybody says, yeah, I guess since you put it that way, yeah. So I hope I unpacked it.
User 3020, can closing costs be paid by the seller?
All day, every day, we want it to be paid by the seller. But you need a damn good realtor to make that happen. And your realtor really needs to understand the market.
And if there was an environment where that could help, it's right here, right now. Because when the interest rates go down, guess what market we're in? What market are we in, Lee? When the rates go down.
Buyer's market.
When the rates go down.
Seller's market.
And then you're not going to be able to get the seller to pay for closing costs. It's done through a negotiation. But like he said, you need a badass realtor. And we'll hook you up with one if you don't have one. Millie, when looking at someone's income, is overtime factored in or only straight time-based pay?
Damn, Millie, you coming with the real good shit. That's the real good shit, yeah.
like it.
Hey, Millie, there's two different lines. The first line is straight line based pay. So there's that line. The second line is overtime. So I say, how much overtime did you put in? And you say, well, last 6 months, I've been doing a lot. I say, cool. How about the last 2 years? Well, no, just the last 6 months. We can't use overtime because I don't have a 2-year work history. But if you say, oh, yeah, my job requires it. I'm a firefighter, and I do 24 hours of overtime every week, no matter what. All right, cool. Can you prove it for the last 2 years? Sure, it's on all my paycheck stubs. Overtime gets at line, and it gets used. Straight base pay gets that line, it gets used, and then we add them up.
I'll let you know where this really kicks in, guys, where we live right here in Riverside County. The cops. It really pays the cops. So their base pay somewhere between $60,000 and $80,000 a year. But with overtime and all these other things that they accumulate by not coming home,
$140, $140, $160 sometimes.
$160 to $200 grand.
You've done 200 grand?
Oh yeah.
I do $140.
And that's
commonly,
all overtime.
yeah.
That's all overtime.
I do $140 all the time on
So we can
cops.
use it for
Yeah.
sure, 100%.
Yeah.
Ash, 1922. We make $108,365.99.
Damn! Ash's shit. She's
Credit is 641. 2 years, same job. $16K down payment. Working on closing costs. Hopefully, after election, interest rates will go down.
Yeah, I don't think the election's going to have a lot to do with anything. I think it's just the economy. We watch CPI every month or every time it comes out, and then Fed speaks, and the Fed has a they tell you when rates are going down. This is the FOMC notes. That right now we're at 5.25 and 5.5% rate, and we anticipate going to 2.5% by the end of 26, beginning of 27. So the election is irrelevant. It's just the control of the economy. I know people like to say it's the who's in charge. It's a little bit of a factor, but not that much.
Ash, let me give you some data. You make the decision, okay? So right now, let's say you're looking at a $500,000 house. Let's say the mortgage payment's $4,000 a month, okay? When the rates go down, guess what happens to the value of that $500,000 to $100,000 house? It goes up. Let's say it goes up to $650,000, okay? And the rates went down. Guess how much the mortgage is? $4,000 a month.
What?
So you can pay $4,000 a month for a $500,000 house, or $4,000 a month for a $650,000 house. The difference is when you buy it at $5,000 and it goes up to $650,000, you refinance it. Guess what will happen? The mortgage insurance, we might be able to make it go away. The interest rate goes down. Now your $4,000 payment could possibly go down to $3,300, $3,200, somewhere in that range. So factor that in your decisions. I don't want to tell you what to do. I'm just going to share what's happening and what you can possibly do. Mia Love, how can I buy a house with over 800 credit score but $37,000 $1,000 yearly income, buy a $385 home?
385,000? Yeah, 300. Mia, I got bad news for you. I mean, one, super props for the 800 FICO. Super props. But all loans are based off debt to income ratio, and 37,000 won't get you it. It just won't. I'd like to tell you, you need a more income. Maybe you love what you do. You need a non-occupant co-borrower or a co-borrower, some sort of co-signer, something like that to make it happen. Or one more option, house hack. Get a 4-unit, use the other 3 for income qualifications. Make sure you cover 25% with your income, and we can get you a house. That way it's a 4-unit. So there's a few ways to do it, but that $37,000 a year just not going to do $385,000 house.
Yeah, guys, it's very common. Multi-family houses, okay? Just one house has 4 bedrooms. Might have a couple different families living there. couple people sharing rooms, probably the kids, but it's very popular right now because houses are expensive and income aren't going up as fast as house prices. So take that into consideration. Ask 22 said T Money 2024. Is it 24 or would it be 25? 24.
The election's in 24.
Yeah, you're right.
Dude.
I'm with you, T Money. I'm with you on that one.
Yeah, me too.
Millie.
Can you tell? Can you tell?
Those are bullets. Millie, can you use OT for 1 year or does it have to be 2 years?
Good question, Millie. 2 years. Has to be 2 years.
Dos.
Has to be 2 years.
That's
Guidelines. Yep. In Spanish, yeah.
For those that speak Spanish,
All right.
dos años. User 3020, does property taxes go up after the first year on a new build?
Yep. Yep. They go up every year.
It's not guaranteed.
They go up every year.
Mine don't.
So they go up every year. So the counter assessor comes in and says, hey, did the value of your home appreciate? And in a good world, it appreciated. Now, in California, we have something called Prop 13, so they can't appreciate it that much. But it goes up. If it's going down, it's bad news, actually.
What he's talking about is a reassessment, okay? So they're going to say, based on our assessment, here's how much the property is worth. But they don't do it every single year.
Yeah, they do.
No, they don't. No, they don't. Okay. So in his county, they go up every year. In my county, they don't.
No, they do the assessment every year. It's a yearly mandated thing. Oh, dude, it's the first time we clashed. All right, somebody Google it. Google it. I'm going to love this.
Google
how often does a county assessor assess the property? Please. Whoville Hater's going to come in on this one. He's like,
I hope you do, Whoville Hater.
Google right now.
I hope you do. So anyway, let me finish my statement. So when they do assess it and the values go up, guess what goes up? Your taxes. Yeah. Your taxes go up. This property. Okay. Whoville Hater just bought a rental property cash this morning. I'm going to put in some money. Doing a cash out refi.
Whoville Hater, great news. Good for you. Good for you.
They do every year Arkansas.
They do every year across the country.
Yeah. No, they assess every year. You're asking
That's what I said.
Taxes go up every year.
No, if they don't go up, that means you didn't. You're correct. They don't go up every year. They've actually gone down a few years, but that was during the crash because the assessor had to calculate into the value of the crash.
Sell it.
I'm not selling it. It's just facts.
Just sell it, man.
It's facts.
Tell
it's
the
okay.
people.
This is one of my favorite parts, but it's not.
Ash 1922. If my husband gets yearly raises, which income will go off of, he averages 7% a year. So we can use it.
And
as long as he has
right after the raise. Or here's another thing: if you can get a letter of intent from the employer, and it says, hey. We're not in May? We're in May. So on June 1st, every year, we get a 7% raise. We've been doing this for the last 20 years. We intend on giving him a 7% raise. I can use that 7% with just a letter of intent. I will have a post-closing condition that says you must have this raise prior to getting in the house, but I can use that with just a letter of intent.
User 3020, since taxes go up, will your payment go up to put money into escrow?
Yes, they will. They mandate it. The bank is in contact with the county assessor because they have to. Whoville Hater? County assessor assesses property every year for the fiscal budget.
Not the question. The question is, do taxes go up?
This is recorded, dude. No, it doesn't.
No, look. Let's go look at the question.
I've actually told you that taxes go down.
No, don't overtalk me. Let's go to the question.
This is fun when I do this. It's always fun.
It is
especially
fun.
when it's recorded.
It's fun because
they don't assess every year.
When
Those
you're
are the
wrong,
words.
you want to overtalk and change the topic.
Not at all, dude. Not at all.
Yeah.
Whoville Hater's doing it for me. He knows. Whoville Hater knows.
Do property taxes go up after the first year on a new build? That's the question. And I said no. You said yes.
They usually
and then
go up.
you changed the question to it's assessed every year.
Yeah, and then you said it's not assessed every year. And I said, yes, it is.
No, I was talking
and
about
if it's
taxes.
not going
Stick
up
to the question. AOC,
because the truth of the matter is, if your property value should be going up every year. You should be increased in property taxes, because if you don't, that's 2008 and it went down. Trust me, it's not a good thing when your house is like worth $500,000 one year and then $350,000 the next, and you go, "Hey, I got a property tax cut! Yay!" No, I lost $150,000 in value.
What you have to do is come back to the argument, and the argument is: do taxes go up every year? So if they're assessed and they're higher, yeah, they're gonna go up. And according to what he says, they go up every year.
No, yeah. If you're in a good world, they do. Yeah.
In a perfect scenario, you pay more, but you make more.
Yeah. Keep going. What do you got?
We
County
tapped, man.
assessor. No, we're not
Nobody,
county.
nobody has any more questions
We have
about
more
buying
dude,
houses.
they don't like us fighting.
They're like, Mommy and Daddy are fighting. We're leaving.
Mommy and Daddy.
I'm going to my room.
It's nothing you guys did. It's nothing you guys did. Sometimes Mommy and Daddy just fight. I'm Daddy. He's Mommy. So sometimes we just
I ain't
fight.
calling you Daddy. There is not one man on this earth I call Daddy.
Not even your daddy.
Not even my father.
Not even your daddy.
Not even my father.
Ask, can we get 2009 prices? I want those 2009 prices. Wait a minute, 2009? No, I don't want 2009 prices. I want
2012.
I want 2012 prices.
Yeah.
2009 is when it was ascending.
Yeah.
It was ascending. It crushed.
I'll take 2012 prices and interest rates. Actually, interest rates are not too far from where they're at right now.
Yeah, they're pretty
we're
high.
like,
Yeah,
what, fives?
yeah, pretty high in that crash. But there was a whole different market. There was an REO market. So some people are saying it's just like the crash. I'm like, no, it's not, because there was a market. It changed. It was REO market, foreclosure market, cash for keys market. There's these different markets. So if you were able to adapt, you did. There's no market like that right now. In fact, there are people that are trying to take advantage of people with a lower interest rate by doing the assumption market. They're trying to create that market, but the banks aren't in line with it.
Who will hate her or just happened to my buyer? What did? Taxes went up? Tiva G is laughing, crying. I want some Powerade. I don't. Any strategies to pay off my mortgage quicker? Great question.
That's a very good question. Okay, so can you buy down the rate? Yes. So strategy to pay down the mortgage quicker. First off, the first thing you need to know is that for the first 15 years, the majority of your payment goes to interest, not principal reduction. This is by design because the banks like their big shiny buildings and they like for their owners of the bank to drive Ferraris. So they make a lot of money and they tell you the truth and hide it from you in the same sentence. How do you make it pay off faster? I've had many people over the years say, hey, Lee, I want a 30-year and a 40-year. I'm sorry, 30-year and a 15-year. 30-year and a 15-year. So I say, cool, 30-year, $3,000 a month. 15-year, $4,000 a month. All right, cool. So if I pay $4,000 a month, I'll pay it off in 15 years? I say, yes. Perfect. Cool. Lee, let me get that 15. I say, cool, I will do that for you. But let me put something out to you real quick, though. You're willing to pay $4,000 a month, right? Yeah, Lee, that's why I told you to do it. Cool. Get the 30-year. And then that extra $1,000 that you were going to pay, every month, pay it exclusively to principal. You won't pay it off in 15 years. Probably pay it off in 13 years. Same exact payment. Why? Because you're going exclusively to principal. Exclusively to principal. And that hacks the system. That is how you pay it off quicker.
Ash Knight 1922 got the answers too. Make at least one extra payment every 6 months. To principal.
Yeah.
To principal.
To principal. If you do not designate to principal, the banks are sneaky MFers, man. They will call it an advanced payment. So if you're ever late, they're like, you weren't late. You were 1 month ahead of us. You're like, no, that's not what I wanted. Well, you didn't designate, so we just figured it was 1 month ahead of us. They play that game. I've seen it a lot of times.
Can you buy down the rate?
Yes, you can. In fact, I'm quoting people right now, and let's just say decent file, probably 7.5%. 7.5. You can buy it all the way down to 5.25. Last one I quoted was this morning, $22,000 to do that. Costs you $22,000 on this file to go from 7.5 to 5.5. Now, is that smart? In most cases, probably not in this interest rate environment. Because Federal Reserve says we are going from 5.25 Fed funds rate to 2.5 by the end of 26, beginning of 27. Which means the rates are going to go down anyway, which means you're going to refinance. So if you paid $22,000 and you're going to refinance anyway, you wasted that $22,000 unless you held it for a certain period of time. And that's break even. That's usually about 38 months, somewhere in that range. And yeah.
Whoville Hater, we give an estimate for taxes in escrow and it almost doubled with a new build. Assess the land only. That's strange.
No, I think it happens. That happens. We've had a lot of new builds
Only
come back.
land?
Well, because the community isn't built yet. And the assessor doesn't have comps and it doesn't have everything to build.
We have a tax cap of property tax on 3% increase. 3% increase?
Who's Whoville Hater? What state are you in?
That sounds horrible.
Yeah, well, not in Texas. There's no cap.
3% increase. So
I know.
If they did it every year, 3, 6,
Yes,
9,
correct.
12, 15, 18. Yeah, what state are you in, man? I'm not moving there.
That's a lot. In California, we have something called Prop 13. We can't move it more than 1%. There's a 1%
New
cap.
Mexico.
New Mexico. Damn. I have property in New Mexico. I didn't
Pay them taxes,
come to think of it. I think
Here they
I
come.
know they're kind of expensive. Yeah.
Tina G, will it work on a 650 score, $25,000 down payment on a $399,000 property, $80,000 a year?
What do you think?
Close.
What's the purchase price?
Close. We got to make sure you don't have a lot of debt. $399.
Yeah, you're right on the line. You're on an 80 grand if you have how much down payment? 25K down payment. So, in order to make yours work, you probably would buy down the rate, because the thing that'll cap you right now is if you came in at 7.5% interest, even with a great credit score like you have, 650 okay credit score, probably 7.5, you're gonna pass DTIs. But because you have such a big down payment on a $399,000 house, you need about $15,000. You got an extra $10,000. If you use that $10,000 to buy down the rate, you would probably increase your buying power, and you might be able to do $399.
Yeah. User 320, if married, do they use lower credit score to qualify for rate?
Most of the time, yes. However, there's a guideline that came out about 4 months ago called blended credit on certain loan profiles. I can use a legally married husband and wife, throw in the 700 and the 650, put them together, come out with 675 and use that. It's called a blended credit scenario. So sometimes I can do that, but not all the time.
Ash 1922 coming in with the answers again. They use the middle. Yes, it's the lower of the two middle.
Yep.
Whoville Hater, New Mexico. Landlord friendly though. I have 400 property.
400, dude, you're a baller. I got land in Rio Rancho. I got a lot of land in Rio Rancho that's zoned RER1, ready to build. I bought a whole bunch of lots, Rio Rancho Estates. Whoville Hater, we might need to talk.
How many doors do you have, Whoville Hater? How many actual doors are you renting? Tiva G, 25,000 down payment. I figure we'll have to buy down rate, no debt.
Yep, I just told you that TVG.
Likely.
Yeah, you know what you're
And you
talking
have
about,
enough
TVG.
cash.
Yeah,
That's enough
25K. Yeah, because if you're doing a $400,000 house, 3.5%. Don't go home ready or home possible with a 650 FICO score. Just if you're LO, if you're not using us, bad move. But whoever, if you're using somebody else, just say, hey, can you tell me what the MI rate is? And then say, if I had an 800 FICO, what will my MI rate? They can do it. And then say, what's the FHA MI rate? And after you see all that, and say, oh, by the way, can you turn that MI rate into dollars for me? And you're going to go, hey, wait a minute, $700, $300, $140. What the hell? Yeah.
Navy Mondana in the house.
What's up, Navy Mondana? Great to see you.
Whoville Hater, 400 doors, 350 That's a lot of freaking properties,
That's a lot of, dude, you're balling, man. You're balling.
So for you guys out there, here's what that means. So when you say you have a property, your property might have 4 units. It might have 3 units. It might have 10 units. You can buy a lot of things. But what really counts is the doors, because that's each individual rent. So 1 door is 1 rent, 2 doors is 2 rents. This man has 400 rents, which is really baller.
Whoville Hater, best badass, man. I'm pretty. What part? Are you in Albuquerque? You got to be in Albuquerque. Well, no, Santa Fe's starting kicking. I was raised in Santa Fe, New Mexico. Anyway, what do we got?
Where did you grow up, though?
I grew up in Santa Fe, New Mexico.
You're still not growing up, man. You lies.
I'm not growing up yet.
Lies.
You're right.
So give us a beat on the race,
Las
man.
Cruces. You got 400 doors in
Is that
Las
a populated
Cruces.
place?
Great fishing.
Great fishing. Country?
It's getting populated, but it's not big. If you compare Las Cruces to someplace it would probably be like, I don't know, maybe Barstow? No, Barstow's still too small. Yeah.
The desert? The low desert?
Yeah, maybe the low desert. Maybe, Palm Springs.
Second
Springs,
biggest city in New Mexico. 100K pop.
100K pop. Second biggest city, Las Cruces. So there's it's a college town. So if you count the college population comes in and goes. Oh, that's why the doors. Smart. Gotcha.
Right.
Gotcha. Anyway,
Ash,
yes.
1922. What's the current interest rates?
if you went to our links at the top, you would see today's interest rate, 15-year, 6.75. 6.75. You would see an FHA 30-year, 5.875. 5.875. Now that's what New American Funding is putting out to the world. But I got a little knowledge for you. I'm about to drop some facts for you, okay? Here's the facts. Everybody, including New American Funding, including the used car dealer, including the timeshare salesman, put out their best possible deal. So when you look at 5.875, the finance world said, okay, we need a quick way for people to discern that that's not an easy thing to get. How do you do that? You look at your APR. If you look at your APR in the 5.875, you're going to see it's 7.091. So the spread between 5.875 and 7.091 is a lot, which tells you there's a lot going on. You have to buy that rate down. So 5.875, 30-year FHA.
Nice. Rates are actually pretty decent, guys. They're not that bad. Ash 1922.
Big ebb and flow. Look at you with the big words. Ebb and flow. When I was in stock market school, they taught me ebb and flow.
It has to be. It's a big rental place since nobody stays there. College and contract work, all government jobs. So it's in and out, huh?
And if you're a young single man, it's a good place to be.
Ash 1922. Oswald did not shoot Kennedy.
I agree. Well, I think he tried. I think he missed. I think he tried, and I think he missed. And I do think he pulled the trigger on a gun, and I think that bullet is somewhere, I don't know, in Never Neverland, or maybe they just gave him blanks. So, Ash. I think you're right. And I think even though President T said he was going to release all the documents when he was in office, he didn't do it.
He didn't do it on aliens either.
Why?
User 3020, to qualify for a mortgage, do they use net income or gross monthly income?
Good question. That's a great question, 3020. That's a great question. So, in a perfect file, we use gross. In a perfect file. However, if you're self-employed, we use net. We got to use net. We have to because there's too many write-offs. So, there's actually a loan called a W-2 only loan where I don't even look at what you wrote off. I just look at how much did you make? Gross. That's it. Box 5 is the highest number you'll have on a W-2. So we go to box 5 on your W-2 and we go, this guy made $112,000. That's his income. If I'm going W-2, I don't even want to look at the 1040s. I don't want to look at the write-offs. I don't want to look at anything. I want to use the gross. However, if you're a 1099 or an 1120 with K1s, I got to go, okay, you top line this. What did you bottom line? And then I have to use your bottom line. So it's that. There are some things I can add back in on a, if you're using it that way, I can add back in depletion and depreciation dollar for dollar, in which case I can increase your income, but both.
Silly Goose Moose 99. So 98 other people were Silly Goose Moose.
Damn.
It's very strange.
Yeah, I know, right?
Where are you guys based?
We are based in Riverside, California. We are able to do all 50 states. All 50 states.
How many?
But we're based Riverside, California. 50. 50.
You do Alaska?
Do Alaska. That's
Alabama?
one of the states. Alabama's one of the
Hawaii?
states. Hawaii's one of the
Florida?
states. You didn't hit New York. Florida, yes.
Why do I have to hit
New
New
York?
York?
Because New York is at one. That one.
User 3020. How do I qualify with base plus commission sales?
Good question, user 3020. Very, very good question. So what we do is we go take your base, and you say your base is $30 an hour. Cool, I'm a car salesman, I make $30 an hour. $30 an hour, they guarantee me $30 an hour. But then, I'm a bang-up car salesman. I make an extra 50 grand a year on top of my base. How long you been doing it? Over 2 years. 2 years is the key. So I have to take that line of 2 years, and if it's ascending, I'm able to use a 24-month average. If it's descending, the guidelines change. So sometimes it's year to date. There's a 30-month rolling average. There's a 24-month rolling average. If it's descending, so we're hoping it's ascending, and if it's ascending, I can use a 24-month average. Sometimes even a 12-month average. So yes, we can do it. Why Riverside? Because the banking industry sucks, and we had a big badass office in Rancho Cucamonga, California. Not Chris and I, we don't own New American Funding. We work for New American Funding. But we had a big, badass office that we loved. We loved that office. We loved it. But the bank couldn't afford the rent. So they said, hey, we can give you guys your own private little tiny executive suite for you and your team. Or we got a gigantic New American Funding office in Riverside. We'll give you the top 2 offices. We took the top 2 offices in Riverside. So,
and then stole a studio.
And then we stole the studio.
Right,
we got a lot of stuff. Anyway, yeah.
You ready to hit
Cool.
it?
Hey, you know what? We appreciate all you guys. If you have any questions, you want to get a house, we are here to help you. We're going to teach you about the Fed. We're going to teach you about foreclosures. We're going to teach you how to hack the system. But in the meantime, we've been Chris and Lee. We are out.